Hey everyone, John and Ray here, slingshotfutures.com. Welcome to the daily futures market outlook for tomorrow's trading. Tomorrow being the 16th of the month. Overall, it was another quiet morning again. We're getting a lot of these with, quiet mornings, and then the afternoon session really starts picking up. And I think a lot of that slowness has to do with simply the fact that volume is being split right now. We have a lot of markets that aren't rolled over quite yet, and I mean, it's hard to get anything going when you're only doing it with half the volume, so it is kind of understandable. Now, before we jump on in, as always, make sure to swing on over to slingshotfutures.com, scroll down and click on the Join the Daily Outlook newsletter. From there, you're going to be able to sign up for our email newsletter list, so be notified every time one of these videos comes out. And of course, along with it, in the email, we'll go over a bunch of stuff that we don't have time to cover in this video, and that's going to be everything from stocks, options, crypto, you name it. If it's moving, it'll show up in there at some point, so make sure to get on that list so that you do not miss anything ever again. Along with that, click on the live trade room subscription and trial info, and from there you can sign up for a free 3-day trial in the live trade room and come in and check us out for a couple days. It's a great way to get your feet a little bit wet, see how we trade, see how we approach the markets, and see just a general day in a general day in the room. Even though lately it's been a little bit slow, you can still ask all kinds of questions, and it's just a great environment to be in. So make sure to sign up for that if you haven't done so already. Now, looking at the markets, we have the euro, which is catching some more bearishness to the downside. That beautiful rejection of that sell zone is holding very nicely with continuation to the downside, and this is really what we needed to see. Yesterday we were talking about how I want to be on the buy side in the long run, but I really don't have a reason to believe the buyers until we get a secondary attempt. And by the time they actually got a secondary attempt, they never actually even triggered above that bull bar, and it already started turning back lower again. Now, this is a little bit of a tough situation because you're driving lower, you have a nice bear bar breaking horizontal support, but then you're selling directly into the next level of support. So there's a lot of chop and slop and a lot of back and forth going on with the euro today. They finally did get the close underneath, and now we're seeing a little more continuation to the downside. Overall objective to the downside is this little box that we have marked up here, and that's going to be between 22,995 down to around 22,785. That area is going to be the next area of support, and that's kind of like, I mean, aside from 22,545 a little bit lower, that's going to be the last ditch effort that the buyers have. I mean, we're holding falling resistance. We're coming off of a lower high back in, early March. We're having a lot of problems here for the euro trying to get it going to the upside. And every time they do try, it's slapped right back down again by resistance. So, going into this level of support, I have to be leaning on the buy side. But if we start cracking below that, it wouldn't be a surprise at all to see that act as a level of resistance instead to try to drive the market even further. And maybe then we can start reaching out to this way wide out wedge that has been on the channel, or it's been on the chart for a very long time. We haven't really come into play with it yet. Now, as it stands, we are cycling back down towards the range to the bottom. 22,545 is the objective now that 23,695 is given way. Really needed to see the buyers step up to the plate, and they failed. So with that failure, leaning more on the sell side. Now, again, as we come into support, I have to be more on the buy side, but I mean, in all honesty, I'm a little heavier on the sell side right now, looking for a little more continuation lower. Over on gold, we did cycle all the way back down to test that major support low at 1317.3. And so far, I mean, it held it for about 8 hours, right? We had a really nice bounce there, another really nice bounce there, but no follow through to the upside before finally, or at least, well, kind of. I mean, this candle still has, almost 2 hours left. But they are trying to close back underneath it and disprove this level of support. Now, these types of zones are especially important when you zoom into something faster like a 5-minute chart, because then you can really see the response off of those areas. We hit it and immediately bounced right back, came back again. Very big weakness on the bear side. Another really nice bounce. They finally broke through it as support, and guess what? It is used as resistance. So all of this chop back and forth on a faster time frame really gave a lot of trading opportunities today. But for the most part, where it is now, we're just kind of waiting. There's not a whole lot that we can do right now because, well, this is a range, and we're at the lows of the range. Nobody really wants to trade at the lows of the range. When it comes to range trading, you got to buy low, sell high, stay out of the middle. Generally speaking, I would want to be a buyer here, but the one concern I have is simply that we are coming off of a fairly big lower high and attempted push down. So even though I want to be a buyer here, I have to kind of think that this might be gearing up for a breakdown. We were talking yesterday on how this type of formation is, you have that descending wedge, and inside of that, you have a little ascending wedge correction that is now breaking down. So this could easily go a little bit further. So even though we are at the lows of a range, I'm a little bit light on the buy side. I would rather wait to see this dip a little bit further down, see if we can get down to those major swing lows from previous at the very least. That's going to be down at 1303.6. Now, are we going to get there tomorrow? It is possible, but it is a pretty big move for one day. Now, noting gold has had some pretty big swings here, so it is definitely possible. But, you know, the overall location where we are right now, even though we are at a range low and we should be looking to be the buy side, I'm still kind of looking more for a sell side breakdown. If they can close underneath this level at 1317.3, it looks like it might be all systems go to the down, and then we can see if we can reach out to 3.6. Might be a little bit higher, right? We always like to look at those lows or low closes just to give us a little bit more emphasis, and the low close is right there at 7.7. So this kind of creates a zone of interest for the sellers to drive down into, and I am going to be more on the sell side going into tonight. Over on crude oil, we have a little bit of a kind of continuation of the wedge, not much going on. The market's still consolidating, not really getting anything going. You know, the buyers had a little bit of an attempt to the upside, but then in one candle it went all the way back down to a new low and then closed all the way back up in. We're just really, really choppy right now. This is a tough environment to want to be trading when it comes to crude oil, and it makes it really difficult to find any potential type of trading opportunities. Now, we are seeing the wedge narrow down a little bit, and we can kind of narrow this down with it, but that is going to create a situation where eventually, after it fans for so long, the wedge is so steep that the market just doesn't respect it anymore. And it kind of looks like the situation that we're dealing with. So the current wedge, I'm going to get rid of that one. We'll look for the next two wider ones outside of that. For right now, though, we're smack in the middle. We're in a range. We're cycling off of major support at 60.20 down to 60.13. Those held really nicely yesterday, and we're seeing a little bit more upside continuation from there. But, I mean, outside of that, really all we have to work with is just kind of figuring out, well, do the sellers want to try to take it, or do the buyers want to try to take it? And either way it goes, every time the market tries to get a move, it ends up just failing on both sides. So for right now, looking for range-bound trading and, well, looking to buy low, sell high, stay out of the middle. And unfortunately, right now, we're smack in the middle. And then over on the S&P, getting some decent bearish continuation to the downside. Really kind of funky candle formations here, though. We started off with a nice bear leg. They got the second leg to the downside, and then we get this weird-looking thing. Normally, this is the kind of candle where it's either going to fail or it's going to go absolutely ballistic. Right now, it looks like it's failing. We have that big old bear tail. We had that huge engulfing candle, completely engulfed the last 2 or 3 candles, and nowhere to be found are the sellers, right? We ticked underneath it. So the bear bar did get triggered in, but they're not there. The seller, I'm sure there are a lot of sellers who got trapped in there, but for the most part, well, this looks like they're trying to put in a little bit of a double bottom, trying to defend ahead of these lows at 27.35 half. Buyers are obviously trying to get some defense. Now, we are coming into the moving average support, and that might have a little bit of something to do with it. But for the most part, a lot of times these moves, when the market is kind of sideways, chop and slop, especially when you get weird things like this, you always want to go backward a little bit and see, does this line up with anything else, right? So if we take this area, and we'll just use a box, and we'll go backward a little bit, and, well, we can see that, yeah, it does definitely hold the support or resistance historically as well. Nice resistance there, a little bit of support at the bottom. Resistance, resistance, support, support, and resistance. And now we're coming back. They blew through it. And, well, guess where we are. So we're having a little bit of a tough time in this zone at the moment, and it definitely can be seen in the candle formations. That 4-hour chart is nasty looking right now. Big bear engulfing candle and absolutely no follow-through. Guaranteed that there are going to be a lot of sellers who got into that one, and they're not feeling so great right now. So the low of that candle was at 46.75. Their entries are going to be one tick below that, so 46.75. 27.46 half is going to be that entry point. And that's the area that I really want to see. Do the traders want to come back and maybe get them out at break even? Because we know the sellers definitely would have taken that. It's just a matter of now, how trapped do they think they really are? Right now, we are in a pretty decent bear leg to the downside. It wouldn't be a surprise to see this continue back lower. But right now, with this failure at the bottom, makes me a little bit nervous that we might have to see a deeper correction first before anything like that happens. So right now, going into the overnight session with this trap, pending that it stays a trap and continues with more bullishness, I'm going to be actually leaning on the buy side tonight, looking for a range to slightly up going into the overnight session and into tomorrow, with sellers just hoping that they can get out of break even at 46 half. We'll have to wait and see if they're actually able to. So that's going to do it for the outlook. Now, in terms of tomorrow, we do have a couple news announcements that we can work with. Not a ton, but tomorrow morning at 6 o'clock out of the Eurozone, we have the CPI for February forecasted at 1.2%. At 8:30, we have the building permits out of the U.S. for February forecasted at 1.32 million. And then at 10 o'clock, we have the JOLTS job openings for January forecasted at 5.89 million. So plenty of stuff to kind of keep the markets going. Hopefully, we'll have a little bit more volume in the morning session. I would really like to actually get some trading opportunities that we can sink our teeth into rather than having to scalp all morning. But, well, you know, you make do with what the market's giving you, and right now that's about all it's given you. So that's going to do it. As always, it doesn't matter what market you're trading. Always make a plan, trade the plan, follow those rules, and you'll be A-okay. Until next time, we'll see you all then.